Okay, let's not waste no time. So, today I wanted to go over um, some of the things that we were doing yesterday, uh, basically lines on a chart, support and resistance, trend lines, Fibonacci retracements, and EMAs, and how to put them into a basic strategy to decide where to execute trades and get some buys and sells in, and yeah, just get a basic strategy going for the beginners, really. So something they can go test and start to gain an idea of how to sort of set up strategies, build confidence, and get some confidence in their trading. So I'm just going to bring up my key levels again. Basic, we've got this trend line, this long-term trend line here. You can see that Bitcoin's just today started trading below it. On the weekly, it's looking a bit bearish. I have this alert down here. I'm not going to take too much notice of it today. But yeah, so how can you put these things into, or tie them all together to start building confluence and start making trades? So I think the best time frames to sort of be able to test these concepts or test any concept on at a fast pace and see whether or not they're working or not is on the lower time frames. Obviously, the higher up you go, statistically, because of the amount of data that's being accumulated on the higher time frames compared to the lower time frames, probabilities are high on the higher time frames. So a lot of these things work better the higher up you go, but you know, you can see on the lower time frames these things working, not working, and just how price moves around them and trades through them, respects them, blah blah blah. So yeah, let's go into the hourly. Can see here that let's go back a bit further. We can see that weekly level supported it, broke through, tested it, broke down, and we pretty much traded around this daily level or this daily range before starting to break down and move towards another weekly level. So the reason why I picked these two weekly levels is because I like to think of ranges. So obviously we have this weekly range. I've got another one down here, but we've got this weekly range here, and then within that we've got the daily range. Yeah, so on a higher time frame, market's trading in between these levels, these two weekly levels. On a lower time frame, the market was trading in between these two daily levels. So that's the basic. That's like the foundation. Yeah, that's the foundation of the strategy. What is the market trading? What ranges is the market trading within? Go down into daily, and now we're trading between this daily level, this weekly level. I don't know if we're going to be able to see too much on how the EMAs are playing out on the lower time frames right now. But what we can see is as the market came down into this daily level, you can see 50 EMA capping the price. Once it got back above it, it was then the 200 EMA's turn to sort of be tested and see if sellers were going to react at this level. Obviously, we came up into this zone of the daily level, didn't fully trade into it, but the zone and obviously a previous high is what was capping price. So we can see this as three things that are giving us a sell signal. We've got a range high in a sense. If we're looking at these two daily levels, we've got this range high up here, a high here, a high in price here, and this 200 EMA. So yeah, that could be 1, 2, 3 things that are giving you a bias towards selling. We then have, I think also we might have had, I don't know if I've got it. Let's have a look. I can't scroll down anymore. I think I also had possibly a trend line from the highs up here. Let's just draw it and see what happens. Nah, not really. Not really, nah. I did have this trend line, but it wasn't, I don't think it was that I was looking at. Was it this? I did have a trend line somewhere. I think it was this trend I was looking at. From these lows and just seeing market somewhere around here anyway. I had a trend line. I can't remember exactly where it was. But yeah, here we've got 3 things that are giving us a sell signal. Here we had a bit less to sort of give this sell, but we can see before that when there is bearish market structure, the 50 EMA is what caps price. So every time the market comes up to this 50 EMA, we could have been selling, trying to get some sells off here. So I think in this area of price here, this was your trade right here. Return to previous highs into a daily zone, and the 200 EMA being respected as resistance. Your sell signal would have been maybe on a 1 hourly. If we go into a 1 hourly, so we've got the rejection of the high. Let me get the arrow out. The rejection of the high here. A trend, if you're looking at this swing here. So the market, we've got bearish market structure, lower highs and lower lows into this level. We've got a change here to bullish market structure, higher highs, higher lows. And then here, these lows are broken. So we've got a shift in market structure. A break, we've got this high taken, but a rejection after that. So what we could have done is either sell a break of this or sell the return to these highs and then sell return to these highs and give yourself, depending on your leverage, if you're doing futures, because we're talking about selling here. If you're, that's the wrong thing. Let's see. Price range. You needed around 1% risk here. Is that 1%? Around 1%. Usually at these kind of levels, because it's a swing trade, I'll be looking at around 5%. Smaller position, wider stop. Yeah. And then let's say you wanted to just trade it to the daily level. It doesn't look like there's too much reward for this trade, but from here down to this daily level, you've got 6. You could go 1 for 1, take off 50%, and then everything after is your profit. So you could say here, take your initial out and then hold your 50% for the as a risk-free trade, in a sense. So let's see if we can apply the same logic to another area in price. And maybe what we'll do for this one is rewind. Delete that as well. So let's go up. Okay, let's look at here. And I want to start looking from around around here, maybe here, on somewhere around here on the 4 hourly. So let's go down into the 4 hour. So is that the right time? Okay. So what we've got here is we can see the market is coming into this level. Every time it's coming up, it's being bought. We made a lower low here. So obviously, bearish market structure, if we're talking about from the move down, the bearish move down into these levels, this is kind of bearish, a break of these lows. Saying that though, we can see that these lows are kind of being respected. We're getting buying into once we come into these levels. So what we're now looking at is this trend line. Is market is trading down into it, breaking through it. We're now looking at this point whether or not these lows down here are going to break. And if they break, then we want to start thinking about selling. We want to start thinking about selling further lower. And if they hold, then we want to start thinking about buying. And if we start thinking about buying, we want to see price essentially, yeah, so if these hold, we want to see, let me just give this a different color. Let's make it green. Yeah, so we want to see buys come in somewhere around here. These lows hold here. So let's play it a little bit. I'm gonna make sure it's not too fast. Update every 1 second. That should be fine, right? Okay, so that's most probably like a day of price action just gone there. Yeah, so we're messing about with that trend line, not being able to break it so far. 50 EMA is being respected as resistance. I'll just pause it there. Yeah, so we're seeing a lot of action happen around that trend line. Now market seems to be selling off a bit, but now we're looking a bit bearish, a bit of a panic here. Okay, ooh. Ooh, so nice. So now from where we started, somewhere around here, we've most probably seen what? About nearly a week's worth of price action, yeah. So when you're swing trading, patience is key, yeah. But we're looking for what plays out around here. Are we gonna break it? Are we gonna start looking to break this 50 EMA, get back above this trend line, 200 EMA, yeah? Looking for the signs that a possible major swing could happen, or are we going to break the lows and continue bearishness? Yeah. So now from here to here, we've seen another 4 days. Oh, now we're getting into this zone, looking like we might break lower. Boom. Now we're above the 50 EMA. Yeah. And now something possibly could be happening. We haven't been able to break this low. We've pretty much respected this weekly level. If we look back on a weekly time frame, let's see what that week looks like. Okay, so what we're seeing here, price coming to this level, and let's see how this week ends. Oh wow. Let's just go back a bit, yeah. So we can see this week ended massive. Even on the weekly chart, we managed to get back above the 50 EMA, so that's big. Let's go back to this weekly here, and let's go back down into the 4 hour. This trend line here looks absolutely wonky. I'm sorry, it looked really wonky on the weekly there, but I hope you guys get what I'm trying to show you here. We have this price action here. We know what's going to happen because we just saw it on the weekly. So here, all while we're looking at this, we actually saw that it came down into this level, right? So we don't break below that low, we get that large pump up and the break above the 50 EMA. Yep. So now this is where we need to start thinking, okay, what is the risk to reward of the trade from this level to our target at the next weekly level? 26%. Yeah. What is, okay, so that's the reward. What do we have to risk for that reward? We have to risk 10%, basically. Yeah. So this is what I would do. I would be looking at getting in small in this position. Say you have $100 account. I want to be risking $5. Yeah, I want to be risking $5. 20x. That means I'm gonna be risking 10%. I think. Yeah, 200% if on 20x. Yeah. So 10% here, $5, £10. If this trade comes through, I've turned that £10 risk into a 26%, 2,400. I've turned that $10 into $40, 40 more, $50, $52. Yeah. So as a swing trade, that's kind of what you want to be looking at. You're risking, you're putting $5 margin down, 10% percentage loss, 20x, ends up being 200% of your margin, which is $10. Or if you win, 520% of your margin. Wait, 520%, it would actually be 25. Would it be 25? I think it would actually be 25%, roughly. My bad. But yeah, that makes sense because obviously the percentage. Yeah, so $10 for $25, which doesn't sound as great. But as you would be, obviously, you're now looking at market structure. So that's your initial entry, your sort of lowest risk, but your sort of highest probability trade. Yeah. So you start low, and then you build up. So now you've entered somewhere around here. The trade's kind of going against you, but you haven't seen anything yet. Boom. Now we're playing with the 200 EMA. Here, you might think, okay, my trade from here to here is going good. This is another sign here. We've got 6% from entry. And we've got another 18% to the weekly level. And really the weekly level is not even the actual high, but yeah. So this is a better trade. This is a better risk to reward trade. This is more along the lines of 3-to-1 instead of 2-to-1. Yeah, so you might want to put a little bit more here, you've got a little bit of risk there. So let's say in this one is 20x as well. So that would be 120%. So let's say you put $10 in this one instead of $5, yeah. So now you got risk of $12 for $18. No, $12 for $36. Yeah, 20x. Yeah. And then if you're looking at the 4 hour, you didn't really get a chance to get in once the trend line has been reclaimed. So I don't know if profit targets were hit there, but let's see what happens from here. Profit targets hit here on this 4 hour candle, and then we get a dip. And you might be thinking here, I might want to get in a dip, but you've made your profit. So let's clear these now. You're up. You've risked $15. You're up 25 plus 36. You're up, quick maths, $61 from 15. Yeah. So you've made, in total, you've made a 4x. I hope that's right. I hope my maths is mathing correctly. We've got here, we've got a golden cross on the 4 hour, which is a good sign. We've, you know, as I said in previous videos, you want the break of the 50 EMA and the break of the 200 EMA to confirm that sort of the longer term swing happening. And then the golden cross just gives you a bit more confirmation of that swing. So now what we would hope is that on the upside now, this 50, once price comes up to meet it, is going to respect it. So now we're getting into a dip, yeah. We don't see no dip, really. We haven't seen the dip yet. But what we would like to see is price come somewhere around here, man. Somewhere around here. Maybe respect these lows, you know, as we've got market structure going. Higher highs, higher lows, even though it's pretty fast moving, even on the 4 hour. We do want to see at least the 50 EMA and these lows respected, being touched. So what's going to go on? We don't get that. It doesn't look like we're going to get it. Okay, so what would have been nice is to here draw this out. We're in a fast-paced market here. If you wanted to, you could be looking at market structure to start placing trades. So higher lows. You want the highs to act as support for your dips. So here, we kind of got that, even though it kind of came in a bit deeper here. You maybe even use the fib once the market's moving like this, and you could have done, let's see, I don't know if it would have worked here, but from somewhere around here where the 200 EMA has been used as support, you can see that we retraced down into the 50% and 61.8% fib levels before being brought back up. And then let's see about this swing here. This swing here, we got a similar thing. We got a similar thing happening here. It was more of the 50% fib level that was where the reaction happened. If we jump back, so let's say, let's get rid of this. You know, we can see the markets moving quite fast. You know, we've got our weekly levels there. We've got confirmation of a bullish momentum from the golden cross. We've got market trading around a weekly level where we would expect some selling. We did get some sort of reaction here. You know, the way the market's moving, we could expect that to be profit taking, or possibly, you know, range high, a move, the start of a move back down to this weekly level. But we know that didn't happen. But at the time, you might have thought, okay, well, that could be the end of the trade. So now we've got this high made. So we got swing high, swing low. We might have put the fib up here on this 4 hour and thought, okay, 38, around 38,700, 38,600, I might want to be looking at a buy, or between, let's say, 36,700 and 38,200, we want to be looking for a buy. Should I extend this out a bit? Let's do that. And just make this a bit bigger. Bang, and you get a trade down to 38,300. So what you might have done is, instead of having your limit orders in here, just wait for this signal on the 4 hour. Maybe a high above here, and then you enter. Once this high has been taken, you enter, and then you would have been entering on this big dildo here. Boom. And then really at this point, you could do the same again if you like fibs that much. But, you know, we can see here that it's market structure here. Where's the path tool? It's in this one, isn't it? You can see, obviously we've got this market structure up here. Not too much of a sizable retracement from 30k. I don't know how much percent that is, but maybe around 10%. So we got the high there, and then we've got higher high, higher low, higher high. So what we would hope is that somewhere around this area here, we could get in another buy. I'm not looking at percentages at this point, and things. I'm just showing you where you could enter and, you know, possibly look for buys once, you know, you've placed your initial trade. You're now just riding the trend. So yeah. Oh, and then here, see, maybe I should have shown you a percentage here actually. Let's see how much if you were to buy up here, which would have been a bad move, you know, to be in that trade, you would have needed 5%, possibly below the 50 EMA. Let's see what happens from here. You get taken out of that trade. So the weekly level's been broken. Market structure's been broken. This looks kind of bearish here. But, you know, we've got this trend line. We've got the 200 EMA. We've got the start of a bearish move from 30K, you know, trading above the 40s. You know, we would expect, you know, from this grind down into this, that we might see some continuation here. So let's see what happens. So really it's the 50 EMA where buyers are coming in at. And then these lows are respected here. These lows are respected. We get this move up. Is it going to break above the highs? Yeah, so we got confirmation of a continuation here. Yeah, so let's see, how much percentage would you have needed for here? You would have needed 6%, roughly. And for the move to the next daily level, 14%. So that's another 2-to-1 trade right there. And if you were looking at now, we've confirmed this weekly level. We're hoping that the next target is the next weekly level, 41%. So obviously within there, you know, if we just speed this up, just look at the 50 EMA. We most probably get a return to the 200, I would expect, at some point, as it's catching up with price. We get a fake out to a death cross there. 50 EMA just pushing down price. Get a move back up. This is quite fun to watch, actually. Shit. And yeah, 60K's hit, man. Trades on trades right there, man. That is the power of patience. So yeah, that is pretty much how you could be trading basic trend lines, support and resistance, EMAs, fibs. Simple. Get rid of all this crap now. Get rid of these price ranges as well. So yeah, I hope that was helpful. Is there anyone in the chat watching this? Crap. 40 minutes of talking. I bet someone came in and out, but no one wants to stay. So yeah, let's get into some analysis then. Obviously, let's get rid of this replay, get back to recent price action. Bitcoin is below 44K. Coming off this daily level here, obviously, you know, as I was just saying, weekly level to weekly level, 40K should be the next place to go. I've just got an alert at this price here, this wick here. That's actually the December low. So I think I've got it here. If I get rid of the key levels and put these on, I've got hella lines. So I've just got some trend lines here. I was just looking at I drew one trend line and then I just started cloning it and just looking at within. I started with these two at the ends here. Yeah, let's get rid of, actually no, because that's the one I started with. And then all these ones, was it that one? So I started with this one, cloned that one up, and then cloned these ones in the middle. And I was just looking like all of these trend lines pretty much fit. Which one is not showing? This one. All these trend lines pretty much fit if you're looking at price. So in some way you're getting reactions at all of these trend lines. But really, you know, these may be more shorter time frame ones, these ones in the middle here, but then you've got the longer the ones on either side. Maybe I should make these a different color, or these ones in the middle, just make them a bit lighter, make them pink. Yeah, so really, in terms of trend lines and trends here, you've got your longer time frame trend lines on the edge there, and then you've got a chance just for some shorter time frame trades within these ranges. So you can see that consolidation in there. Consolidation in there around the 50 EMA could have possibly been a buy signal for price to get back to the range high there. You have consolidation up here. Once it gets back to that high, it's consolidating a little bit before, but just ranging in between these two levels here. High was made into what I've got as the range high. What is this 51k? Is that a key level for me? Yeah, we was looking at this earlier. Yeah, into a key level. And then we started breaking down from there. So possibly you might have been looking at shorts here, like we said earlier, and then you know, you might have been able to add and get in some smaller short-term positions as the market was sort of trading within this range. Maybe you buy here, sell here, etc., etc. So yeah, man, definitely go away. Maybe put this video up on, if you've got multiple screens, put this video up on one screen and just start testing this stuff out. It's only four concepts there that can get you decent gains if you formulate a decent strategy with them. You need to be looking at what phase is the market in. Is it trending? Is it ranging? What kind of trend is it? Is it a bullish trend? Is it a bearish trend? And are we consolidating? Are we trading within a range? And then yeah, just if we're trending, follow the trend. If we're ranging, play the range until it breaks out, and then you want to start following the trend again. And you want to be, I think, let me think about it for a second. If you have a range, you kind of know where your limit of the ranges should be. So you might be able to play higher risk in those areas. When you're in a trend, maybe more especially downtrend with crypto, you never know where that large candle to the upside is going to come, or the large candle to the downside. So you might always, or if you're in a bullish trend, so you might always want to be careful with your risk in case of downside or upside momentum while you're in a trade. But I think so long as you're always calculating your risk in terms of risk to reward, remember, so long as you're risking, for every 1% you risk, you're aiming for 2%. You only need to win 33% of your trades. So anything above 33%, every win after the fourth win, essentially, if you're winning 4 out of 10 trades, you're in profit with 2 to 1. So 5 to 1, which I think is more between 5 and 6 to 1, I think is more of the general average with consistent traders. You're nice. If you can get a few 3 to 1s in there as well, you're nice. But you always want to be patient, and you always want to be on the right side of the market. You don't want to be counter trend. You don't want to be trading against a trend. Obviously, if you're expecting breakouts and things like that, is different. But I always think you should wait for trends to be confirmed rather than trying to preempt, because as we can see, you know, once things are confirmed, there is a chance for large movements. Or once, you know, if you're in the early stages of a good swing, there's money to be made. So yeah, I hope that helps. Get into some analysis. I don't think we really need to do analysis. Bitcoin's doing badly. It's going to 40k. Ethereum's going to, like I said earlier this week, it's going to at least 3.3, most probably 3k. XRP is going to 60k. I should have sold it, but I haven't sold it yet. XLM's most probably, I haven't even got levels on XLM yet, but it's most probably going, it's most probably going to see these lows. Yeah, man, hold on to your hats, guys. If you're buying, maybe hold off. If you're buying spot, Solana's pretty much at 150. I did call it. Maybe even this week or sometime in the weekend or whatever. Yeah, man. See, listen to me, man. Come on. I know what I'm talking about, man. BAT, one of my favorite coins. I haven't been paying attention to it recently, man. But there could be some shorts here back below $1. Yeah. So another thing that I'm doing this year, I want to keep a proper log, and these videos that I'm doing Sunday to Thursday, live trading, I want them to, you know, be a bit more interactive with. I know there's a lot of beginners, a lot of people that are not really have large accounts they're starting with, and yeah, so what I'm doing basically is I'm starting my futures account again. December was a bad month for me. I'm down on my futures account. I'm down like 24, nearly 25%. So scrapping the board, I'm starting with a $200 account, and I'm going to see what I can do with that $200 account. With the live streams, I'm going to be very transparent with my trades, and I'm just going to do my analysis, put all my trades in a trading log, results, actual winnings, everything. So yeah, hopefully that should be good. Post it all on YouTube, get the content out, and yeah, man, some proper interesting stuff. I wish people were here to flip and listen to me say all of this stuff, but no one is. But we move. Whoever watches this first on YouTube's gonna get the scoop, because I ain't telling no one. Yeah. And when they start seeing it, they're gonna see it in the log anyway. But I must really start that either tonight or tomorrow. I don't want to rush into trades. I'm in a Bitcoin short from I think around 44k. Where's my phone? I could just open up Binance on my computer, but I think I need to log in. And that's long. Bro, where is my phone? Do I have a phone? I'm sure I have a phone. I didn't imagine that. Yeah, so somewhere around 44k. Let me try and find my phone so I can find the actual price. Yeah, so 44,359, and I'm hoping this trade is going to be the trade to take me down to 40k. I've got a profit target at 42,500, which I think is the December low, or just above the December low. So I'm looking at 42,400. So yeah, that's what I'm looking for. I do think we go lower to 40k, and I might look at lower time frames to get in on that trade once we get to this December low. But from here, so 42,500 is about 4%, I think, from 44,300. And my stop loss is at, I think this is more of a 1-to-1 trade. Yeah, so something like that. And then my stop loss is here. Yeah, so it's 2 to 4, so 2 to 1. 2 to 1. Yeah, as I said. So long as you're 2 to 1, your profit's there. So this trade, I have a margin of, it was supposed to be $5, but it actually turned out to be $4.30, or it is $4.30 right now. So profit at target is around $3.70. And my loss would be 4,500. My loss would be $1.68 if that doesn't get hit. So yeah, that's that. Thank you to everyone who watched this far. If you're watching on YouTube, appreciate you. And yeah, join the community. If you're new to the channel, like and subscribe. The links are all in the bio. Get in on the trading log so you can get my analysis and keep up to date with this futures account that I'm starting at $200. Hopefully, as we start building it up, start off small, build up, and then we'll start taking some high risk trades. Most probably get some high risk trades when I'm able to sit at the computer for a decent amount of time and place some small but small, maybe 1 hour, 2 hour, or half day trades with a bit larger size. Maybe instead of risking $5 per trade, we'll risk like $20 or something like that, and aim for a bit larger. Yeah, so yeah, all that's coming. Thank you guys once again, and peace out.